Hi, I'm Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our May market update. So we have seen a steady incline in active listings on the market in the greater Phoenix area since the beginning of the year. We are off the lows from the pandemic where we had less than 3,500 homes on the market. Now we're hovering up above 20,000. Depending on what resource you look at, I'm talking about just Maricopa County and not the surrounding areas. So in Maricopa County, which is mostly all of greater Phoenix, we are just above 20,000 active homes on the market. And that number is continuing to rise at a not aggressive pace, but at a steady pace. In the long run, this is actually a good thing. We want to get back to pre-pandemic levels of active inventory. So in the homes that are coming on the market, not many of them are distressed. So these are just normal sellers for the most part. So we're not seeing short sales, we're not seeing foreclosures. These are just normal people selling their home. So we're kind of getting back to normal. The part that's not back to normal is the buyer pool. So supply is outweighing demand right now, and that is definitely putting some downward pressure on pricing. As supply increases and if demand stays low, then obviously we would see pricing continue to soften. We'd see more price drops and we would see a year-over-year loss in home values, which doesn't happen that often. So going back to like the 1940s, there's only been one time in history where home values actually came down, and that was the GFC in that 2008 to 2011 range. So for the most part, having year-over-year negative valuation in home values is pretty rare. So the good news is that supply is probably going to slow. We are starting to see that supply trend slow down, which is very in line with our seasonality, right? So as we start getting into the hotter weather, so our June, July, August, we always see a pullback in active inventory. So I predict that we are going to start to see that supply start to come down. Now, I'm saying that demand is suppressed, which is true, but it's not so low that we're seeing a rapid drop in home values. It's more just, it's very slow. So there are enough buyers purchasing property to keep that overall valuation for homes relatively flat. I'm talking about less than 1% possible of negative appreciation year over year. And that's also going to be extremely area specific. There are some areas that have no active listings, and when a property gets listed, it sells above list price. So this is very area specific on what's happening. So the area that you're in may not experience any sort of negative appreciation and may still see appreciation year over year, while some of the other areas are going to be more affected. So let's talk about mortgage rates. That drives everything. So we've seen a lot of fluctuation and craziness in the economy, geopolitics, tariffs, just a lot of volatility, and that does affect mortgage rates. So when the tariffs were implemented earlier last month, we saw mortgage rates drop, but then we saw them pop just as quickly as they came back down because of the volatility that existed in the bond market, which is very abnormal. We do not want to see that kind of volatility in the bond market. The bond market needs to be kind of steady eddy. We have gotten back to that. So mortgage rates are now still continuing to hover kind of in that mid 6% range, below 7% based on your overall credit, how much you're putting down, those types of things. So we've gotten back to where we were and what the market has gotten used to. I do not think that we are going to see rates come down at a quick clip. I think that we're going to continue to remain in this kind of mid 6%, maybe low 6% for the foreseeable future, not until we really start to see the job market break and the economy get really soft, which we are kind of starting to see the early signs of. So at best, where I see mortgage rates getting to is maybe into the high fives, as low as maybe 5.75. I do not think that we're going to get into the mid to low fives. I think the days of 4% mortgages for now are behind us. It could be years and years before we get something back there. So if you're somebody who has been on the fence or waiting to sell your home to buy your next one until rates get into the fours, That's fine, but I think you're going to be waiting for a very, very long time. And what will end up happening is you may end up having to wait so long that when the market starts to recover a little bit and we start seeing that annual rate of appreciation, that you have missed out on property values going up, waiting for a lower interest rate. So what can buyers expect as we go forward? Well, this is a fantastic market for you. You have all of the power, and this does not happen very often. And this market can change relatively quickly based on what interest rates do. They do not need to come down that far, and we've seen it happen over the last few years, where as soon as rates get to that 6% range, we see a very big increase in buyer demand, and we're not that far away. So if you are a buyer, what you can expect right now is to, yes, pay a slightly higher mortgage rate, but you can get the seller to, again, buy your rate down, give you concessions towards your closing costs, do repairs and like big repairs if the home needs it. So roof replacements, HVAC replacement, those types of things. The sellers who are on the market are starting to recognize that they need to be more aggressive in their pricing, and they need to do more for buyers in order to actually move their property and sell it. So the buyers, for one of the few times in history, in recent history, have a lot more power in the negotiations than they have in the past. So if you are a seller entering into this market, well, it comes down to price and presentation. I have said that in countless videos before. That hasn't changed. It's more important than ever to price your home accurately. If you're looking at recent comps, you may even need to price it below what your neighbor recently sold for to attract attention. If you're pricing correctly or even a bit aggressive, you can still expect multiple offers. I had multiple properties this last weekend, one that did a price drop that was pretty aggressive, the other that was new to market and priced it accurately. Both of them ended up with multiple offers. There was only two, but that's more than one, so it was multiple. But each of those properties ended up with multiple offers, which gave the seller actually more leverage than they had going into it to negotiate those two offers against each other to actually increase the purchase price as well as improve the terms for them. We're in an environment where we have increasing supply and suppressed demand, so anytime you get an offer, take it serious, right? Every offer is worth countering because you don't know what they're willing to come up to. This is a business transaction, and buyers know that it's a buyer's market and might be feeling you out, especially if you've been on the market for 60, 90 days, which isn't abnormal right now, and kind of historically more normal for a run-of-the-mill housing market anyway. You know, back when I started, it usually took somewhere between 3 to 6 months to sell a home. That's why listing agent contracts are anywhere from 90 to 180 days, because that's typically what it takes to sell a house. As we head into the summer season, I do think that just in general, we're going to see a pullback in active listings like we always do. We typically see the luxury market decrease, so the average price per square foot comes down, but that's mainly because your luxury properties get removed from the market, not because there's some sort of crash that exists. That happens every single year. As we enter into those summer months, buyers should have more buying power as well, just because there's less competition. So we just generally see less transactions in those hotter months, so be prepared for that. If you have any questions on the housing market, where we're at, definitely leave them in the comments below. Don't forget to give a like and subscribe, and I will see you next month.